Are stocks peaking? Is gold about to head lower? And are bonds about to break out? Answer those questions and more on tonight's Sunday Night Charts. We take a look at charts to help you with a trading week ahead. I'm your host, Steven Van Metre, and thanks for joining me today. The moving averages, colors on your screen, 21 days in red, 50 days in green, 100 days in blue, 200 days in tan. Price versus momentum. Price is a general direction. Prices are headed. Momentum is a rate of change. A bullish indicator for both is positive and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time of trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. So let's start out by taking a look at these slides from indexindicators.com and look at the story of why stocks may be peaking here. And these are the percentage of S&P 500 stocks above the 50-day moving average. So when stock prices are rising, here you see S&P in black, you want to see the number of percentage of companies, of stocks in the above the 50-day moving average increase. And what are you seeing? You see it peaked here in between August and now. We're seeing it peak at that same level, about 65%, is starting to head lower, which suggests that the equity market, which is being driven now by just a small number of stocks, is likely to head lower. Take a look at the percentage of S&P 500 stocks above their 200-day moving average. That too is rolling over and heading lower, suggesting that this move in stocks is simply a last move higher before the whole thing comes down. But let's take a look and see what we've got. The S&P 500 symbol SPY, price holding bullish, momentum still mostly bullish, now above all the key moving averages as it was before and last week. And the momentum screens, the 1, 3, 6, 9, 12 month, all positive, meaning price is higher than it was over these prior periods. Let's take a look at the SPY and see what happened here. It came down and hit this volume support line right at the 6-month mark, held here and just rocketed, just sprung right off of that. Where it stops, it will have to find a new supply zone. Is it here? Is it higher? It's hard to say because we do know the sellers were right in the zone. So this could be the beginning of where we'll see a zone form. It's just too early to call, but you can look at where the volume profile line is and you can see where the support and resistance. So right now, the question is, where is resistance? We don't know yet, but we'll soon find out. Let's take a look at the Qs. NASDAQ 100, same story, price momentum, mostly bullish across the board. It too above all the key moving averages, all the momentum screens. Price is positive over all of these different indicators and time frames. So that's all plus for the tech market as it breaks to new all-time highs. And there you see the 6-month volume profile telling you this supply zone was indeed where the buyers were at. Every time it dipped down, they bought, dipped down, they bought, and now they're taking it up. The only question remains is the resistance at the current level where you're seeing prices? Are we going to see resistance start to build up here, or is there an even higher move to come? We just don't know enough yet. But I want you to understand the power of these volume profile lines and telling you where the buyers and sellers are at. So you can see in both the SPY and QQQ, lots of support underneath. And that gives buyers confidence that if prices come down, that other people will be there to support them. Let's take a look at the small caps. As we know, small caps tend to lead large caps momentum, now turning bearish. So it's slowing down. The rate of change is slowing. That's how your momentum is bearish. Above all the key moving averages, that's a plus, and above everywhere it was across the board, 1, 3, 6, 9, 12 months. So momentum on those are positive. Let's take a look at IWM and see, and what do we find out? And you can see all the moving averages now still clustered together. And if we zoom out, you can see this massive just sideways pattern. So small caps have gone nowhere almost since February. But what do we see? We're in what is clearly a sell zone. So the ball is in the seller's court to drive prices lower. There's a lot of support underneath it. As you can see, the buyers are down below and they've steadily been buying this up. So the question is, where do small caps go? If small caps don't break out and go higher, Well, guess what? The large caps aren't going to keep going. They just can't. So right now, the sellers, it's small caps that you need to watch. That's the story. And you look at those percentage of stocks above the 50-day moving average on the S&P 500, and you start to see some danger beneath. Now let's take a look at the transportation sector. It often is a leading indicator. Price now bullish. So price is rising across all the moving averages. Momentum is accelerating on the 21 and 50 day. So good news there. Above all the key moving averages, 6-month momentum. So where it was 6 months, it's actually falling from where it was 6 months ago. Not a major deal when everything else on your screen is indeed green. So let's take a look at IYT, where there it is. And what do we see? Yeah, where it was. Listen, we're on the 1-year chart, so we can see 6 months ago price was still a little bit higher. That's why we're flagging red. But look, you can see that beautiful bottoming pattern that came out, was looking at resistance for so long, turned out it was support, and prices shot right back up to where they almost were at their prior all-time highs. Let's zoom out, you can see it up here. So what is it telling you? That IYT is running into resistance here, and that's going to be a problem again for the S&P 500 and the NASDAQ 100. So keep that in mind as the risk still remains to the downside, and you see that we're running into resistance here on the transportation sector, but it's certainly got a nice rally off of that volume profile line. How about the energy sector? And unchanged, except it's now dipping below its 9-day moving average. Not a big deal. Energy sector, everyone's massively bullish on energy. Is the dollar going to ruin that story? Well, potentially. Remember, we talked about how it would likely get up here into this current range, into the 57, 58, and start to run out of steam. And how did you know that? Well, you can go back over a 5-year chart and see where there is trading activity. So what's happening, again, just to refresh if you missed an episode from a week or two ago, you see where buyers are at here at this $56 price point going back to 2019. They came in here and they bought, and then price went down. Well, guess what? They were probably trapped in those positions. So what happens when price comes back up? You have a lot of former buyers turn sellers, and that's where you go from support turning into resistance. Now, the upward mobility here for the energy sector, well, it looks to be pretty good, but let's take a look at crude while we're at it. So the 6-month volume profile in crude still remains at 65. If we zoom out over the 5-year chart, you can see crude is just kind of in an uncharted territory over a 5-year window. Let's go back out to 10-year, and you can see it's kind of running into some problems. So you see, once again, buyers back here in 2012, did they get stuck there and are looking to sell? Probably not, but you can just tell that there is going to be some resistance now in the low 80s here for crude. Still, the XLE suggests there's a bit of resistance here. Would look to see price maybe come down and down into the 54, 55 range. Plenty of support from volume at 52. But just remember, there is some slowdown in trading here. A short-term peak, look for that to come down and confirm again into, say, the $55 price range, and see if it finds some buyers there. How about the financial sector? Price being bullish, momentum is bearish, now flipping bearish on the 21-day and 100 as momentum slows down below the 9-day moving average. Financial stocks, everybody's bidding everything up like crazy. Financials got tons of support thanks to massive amounts of corporate share buybacks. So a little interim peak here, is that really a big deal? No, because there's a ton of support. If this is indeed a short-term peak, look for price to come right back down into this $39 price level where there's definitely support, and price probably goes back higher from there. So look for a short-term pullback in the financials. And of course, unless the bond market has something to say about that, we'll get to that soon enough. How about the industrials? Price now bullish across the board. Momentum saying, wait a minute, price is rising, but the rate of that price growth is slowing. It's above all its key moving averages, above all the price indicators across the bottom, the momentum signals. Everything's looking good on the industrials. Everything just wants to go higher as the economy is slowing down. And you can see here that volume profile line at 103. It wasn't much of resistance. It just smashed right through that and is now turning into support. That's good news for the broad equity market, but industrials mostly have been going sideways here. Wasn't for the 200-day moving average where everyone bought like crazy. Well, bought right back into selling. So do you think industrials head higher here? Well, I say there's a lot of sellers right above 105, 105.61. So look for a retest higher into next week. If that gets rejected, prices definitely will come back down into the 102 range. But you're just seeing a market that's looking kind of tired here. Certain parts of it are driving higher, but you're seeing some exhaustion. Utilities. Momentum turning bullish now on 21-day moving average. So price is rising. The rate of that price increase is increasing. 50-day, not so much. It's turning lower, and momentum is still lower below the 9-day moving average. Utilities have been just all over the map. Making some very large price moves. I'm sure some of you who are traders love these big moves back and forth. Lots of volume profile support below. And I would say you can see the 50-day moving average trending lower, momentum on it lower. 21-day moving, you see it rising. So what is likely to see here with utilities? Would surprise me if it tags the 100-day, tries to hold there, or the 21-day before it makes another move higher. Obviously, you get up here into the 69. That's your call to sell up there. Buyers clearly below at 64. So not a lot going on here, but I would expect a little bit move lower before an attempt to take that higher. Maybe a bull flag forms out of this. We'll kind of see how that goes into next week. On to large gold miners. A lot of red popping up on the mining stocks here. So price is rising on the 21-50 days, and momentum's increasing. So some good news on the moving averages, but look at where it is, below the 9, below the 21, below the 100, and below where it was 3, 6, 9, and 12 months ago. Those are definitely not good signs. It tells you people are likely selling. And let's take a look at GDX. And as I warned, it did smash through that volume profile, but I told you it was going to hit resistance like around 34, maybe if it got lucky up here at a 35, hit that line that has been there for years. Let's go back out to the, well, maybe not that far. How about the 2-year chart? You can see right here, this price level, 33.48, hard no, rejection, price comes down. Where do we see this for GDX? GDX should come down and retest. There's $31 price range. If it doesn't hold, now we're going back down to 28 and eventually down to 27 to see if it holds there. So the risk for GDX is lower. You can see that the 10-day volume profile told you this was, you can see, just run the volume profile. You can see where that resistance was at. Let's scale back on the 30-day. So it's got price support below, but you can tell where it got rejected. People were definitely selling there. All right, so that tells you downside risk to gold miners. Emerging markets, well, this is pretty ugly too. Below all the key moving averages, below where it was 6 and 9 months ago. So momentum slowing there. 3 month though is good. But that's got a lot of work cut out for it. Momentum across all the moving averages is slowing. That's not a trend you want to see. Let's take a look at EEM, and bam, look at that. Right at the 6-month volume profile line. We looked at that last week, and I said, look, this thing is going to get rejected here, and it did. It's heading lower. So where is a likely path for EEM? Well, it's most likely going to come down to the, say, $50 price range where there were buyers, and see if those buyers are there. If not, well, it breaks through that, and 44 has to be a very reasonable target down here, 44.15, and it's got to be a reasonable target because that's the last place there were buyers, was between 44 and 45. So look for this to break down below 49, and you got a quick move to the downside. Not a good look for the gold miners for sure, because you want, if you're bullish on gold, you want to see EM rising. How about high yield bonds? Perhaps signaling a massive risk off move, price going bearish, momentum going bearish. So you're seeing price on the moving averages heading lower, and the rate of that change is going down. So that's bearish, below all the key moving averages. It is below where it was 6 and 9 months ago. It is below where it was a month and 3 months ago, but that trend is starting to rise. So there's a lot of ugliness in high yield bonds here. And if high yield bonds go down, well, the risk assets are coming with them. And you can easily see this volume profile line, which has been a massive support of buyers, is starting to look as a line of resistance, suggesting prices are heading lower. You see a 21-day moving average price is riding it lower. You can see the moving average curving, rolling over. You can see the rate of growth is slowing. That's why you're seeing momentum down. And that is the story, is that high yield bonds, if these start to break down, Their next level of support is here at 85, and a lot of risk because when junk goes, everything comes with it. And right now, you can see, let's look at the 10-day volume profile telling you this. You can clearly see over the last 10 days where the sellers are at. Say same story with GDX, and that's telling you high yield bonds likely heading lower, and that is risk off for the broad market. How about bonds, TLT? Of course, we know that's Bond King's favorite. Treasury loves it, loves duration. That's what they tell them. 21-day moving average, price bullish, momentum bullish. Now it's remember this was red just not too long ago. Price on the 50-day moving average is still trending lower. Everything else is good now above all the key moving averages, and you can see the 1, 3, 9, 12-month negative and rising. So it's coming up off of those red levels from before. Let's take a look at TLT. So you can easily see now it's above where it was 6 months ago and rising. You can see it's above where it was or below where it was 12 months ago, but it's rising that trend as well. And looking at 90 days. And so where is TLT likely to go? Well, you've got this 148 volume profile. That's where it is. What I want you to see, and let's zoom out a little bit. No, well, I think maybe that was right. What happened in the overnight is price came down. Maybe we need to go to the 30-day chart. Here you go. 30-day chart. See the volume profile line? So what happened in this overnight is Thursday is price crashed down right into that volume support and then sprung higher. Isn't that cool? So you can see people here were sellers, and now those sellers are flushed out. And what does that tell you? The next direction for TLT is up. And where is that price likely to go? Up here into this 149, maybe even upwards of 150. So look for that. That too is signaling a risk-off move for the equity market as bond prices rise. And you can see it in the volume profile. How about gold? Price, momentum bullish across the 21 and 50-day moving averages, dipping below the 9-day, dipping below the 100-day. 9-day, not so much a big deal. 100-day starts to be a problem. 6-month momentum, which is a lot of, this is one of the most key momentum signals because a lot of computerized programs look at the 6-month range. If price is below where it was before, they start to sell. So let's take a look at gold, which keeps getting rejected at the same spot. And you can see it gets into this 18, 20. And what do we talk about? It's going to get rejected. Sure enough, it did. And let's zoom into the 10-day volume profile line. And you can see the price gets up here. And that's where the sellers were at. It makes sense because that's where the sellers have been at is 1800 to 1820. Tells you the next direction for gold is back to retest the 1750 level. And perhaps if not so fortunate to 1725, and if it can't hold that, then you're down to 1675. That is the last point where everything comes unglued. So the fact that gold isn't rallying here, in fact, is looking to head lower as the 6-month volume profile line is where the sellers are at. Again, signaling risk off move to the market. Look for gold to head lower. How about silver, which was trying to move higher and looking like it was going to try to get through some supply zones? 21 and 50-day, both price momentum bullish, 100-day bearish, below the 9-day, not such a big deal. 6-month momentum, 9-month momentum negative. So you look back where it was 6 and 9 months ago, momentum is trending lower. That is not a good sign for silver. So let's take a look at where it's at. And here we have, you can see 6-month window, price below. Programs will sell. But the key issue that we talked about is you zoom out and you see this buy zone here. This was a buy zone. Up here was a sell zone. And when the sellers won and price came down, the buyers said, hey, we want at this again. And they got up here, and some buyers from back in here, you'll see buy these dips became sell the rifts because they wanted to get their money back. They lost their confidence. Price went down. Buyers stepped in, came up, and guess what's happening here? More people that spot in here are looking to sell. Now you could say, hey, there's potential left shoulder head, potential right shoulder form. That is entirely possible, but at the moment you have to interpret this. This was a supply zone of buyers, and now it is a supply zone of sellers, and that would be dangerous. So if you're bullish on silver, you're hoping this is an inverse head and shoulders that would take prices back up into the 27, where there's inevitably sellers still there. If it's not an inverse head and shoulders, then you're looking at a retest of 22 coming at some point. And if that doesn't hold, well, then the bulls here are in trouble and price is going to go down a lot. And the dollar has something to say about that because It's green across the screen. And when the dollar goes up and bonds go up, there's your deflationary move. Everything else has to go down in price. It's above the key moving averages. Momentum's all positive. I mean, everything's looking good for the dollar. So let's take a look at DXY. And here you can see that it is indeed trying to break out of where it was a year ago. Momentum is getting behind this, and 94 is the number to break. And let's take a look at UUP, where you can pick up the volume profile. Remember, I keep saying every time it came down, you'd be like, oh, it's into the dollar. I'm like, look at the volume profile. It's telling you this is where buyers are at. And indeed, buyers are there. Let's go to the 2-year chart, and you can see buyers are clearly buying everything at 94 that they can, and they want to see price go higher. Look at the 5-year chart. They're buying at 94. You want to know what support is on the dollar? It's at 94, and what that tells you is when the dollar breaks out. It's not if, it's just a matter of when. You get some massive tightening as it shoots up into the $97 range. Bonds go with it. There's your deflationary move. There's your unwind of the market. And then with that, we'll see you back on Monday for the show. I'm your host, Steven Van Metre. Thanks for joining me. The content of this video is provided as educational information only and not intended to provide investment or other advice. It also has to be construed as recognition or solicitation by selling security, financial instrument, or participate in any particular trading strategy. This video was prepared by Steven Van Metre. On personal capacity, opinions expressed in this video that I do not reflect the view of Atlas Financial Advisors, Inc. or Steven Van Metre Financial.